And the market had another big green day today that seems to have been the common theme since going back to around April of this year. We have been on a tear, and this day in particularly is partially driven by Google and Microsoft, who reported earnings. So we're going to start just real quick with the S&P 500. You can see right here, nothing has changed. We are still above all of these moving averages and this market bias indicator, which shows this overall sentiment. Bringing up the MACD, we are still bullish on the MACD. As far as all indications, we're above the zero line. The MACD line is above the signal line. And we are continuing to make higher lows. Whether or not this right here is a higher is yet to be determined. And same with the RSI. If I just get rid or make myself a little bit smaller, and then we can bring up the RSI right here. So again, higher highs and higher lows continue to go on the RSI. As far as the S&P 500, nothing has changed. So let's bring up Microsoft, and then we're going to bring up Google after that. So I wanted to point out right here, we did have a bounce. Let's zoom in a little closer so you can see all of these lines right here. So we had a bounce off of this 7-day moving average right here, and it is still on a bullish trend because the 7-day moving average is above the 25-day EMA, or period EMA, I should say. And let's just zoom in the MACD right here. Now, this is pretty important. You can see that we actually have a bounce right here. I don't know if you could really tell. It's very slight, but we had a bounce right here. But what's interesting is we had a bounce off of that to potentially show a indication of a continuation to the upside off of these lower highs, and we were also producing lower lows. So it looks like momentum was waning. You can see that we kind of broke this right here. And then we started a new direction down, and that was showing bearish divergence. So if we minimize that right there, and you can see it on the RSI right here, we had bearish divergence, and we could potentially just blast right through it. If we bring up the Heikin-Ashi candles, you can see that we had red, and now we have a doji, so it's not a strong uptrend, but you know, it's something someone could get into, but it's just, again, it's so overbought. Is this the beginning of another huge rally like we've had in the past? Or are we going to go back to the market bias indicator and bounce off of that? Or are we going to have the Fed just completely crash us and we go down to potentially even lower lows? It is really hard to tell, but what I will say, and what I do think I can provide value here, is if you are looking to go long, this might not be a bad opportunity to do it because their earnings are out of the way. And while there is a surprise in the negative as far as the earnings, there was a revenue surprise by 1.27%. So let's bring up Google right here, and Google is going to be basically the same thing. Now, it has a different path. It tells a different story. It has had more of a lackluster rebound overall in this market compared to Microsoft. Microsoft has really just been driving the S&P 500 forward. But you can zoom in real quick and you can see it is very similar. We have that doji bounce off of these moving averages. And if we actually just hide the price action for a second, you can see that we are still above the 25-day period, the 25 period EMA. And if we zoom in on the MACD, we are actually having the signal line above the MACD line. So that is bearish. We are red on the histogram because of that. And we are inching towards the zero line. So it's like, as far as everything is considered before these revenue reports, before these earning reports, it almost looks like we were heading to a return to the median, I guess, return to the moving average right here, the Heikin-Ashi or the HA market bias indicator, which stands for Heikin-Ashi market bias indicator. So if you're gonna go long on either of these, this could potentially be a good launching pad. If you're going to look to go short, just wait it out, because the technicals are showing that might actually be coming. I think the Fed really is going to try to scare some people, and just to scare people, it might actually be in reality. They might actually really just not be talking, but actually trying to walk the walk as well, and really just bring the economy down, mainly because of unemployment. And you can see right here, the unemployment level right now looks like it's about 3.64% for unemployment. And it looks, if you really zoom in, there is just a slight, let's see if we can make some sort of line out of this. Not really, it's been kind of flatlined, but you almost have a slight little uptick right here. And that's really what the Fed has just been trying to drive home, is just increase those unemployment rates to really just slow the economy down. But that's all I have for you today. If you like this video, you want to see more, hit the like button, hit the subscription button, hit the notification bell so you can see all of my latest comment. Really appreciate the likes. Until then, we'll see you next time. Thanks.